Nvidia's fourth quarter sales rising 12% from the previous quarter. Looking ahead, the chip giant is expecting a ramp of Blackwell in the first quarter, while CEO Jensen Huang touts Nvidia's new generation of AI chips. Here with more is CFRA Research Senior Equity Analyst Angelo Zino. Angelo, it is good to see you. So listen, you saw the print. You've been listening to the call. Angelo, give us your high-level takeaways. What'd you make of this report?
I thought it was a good report. I thought it was a good call overall. I think Jensen addressed as much as he possibly could in terms of some of the issues that are out there. Clearly isn't going to be able to kind of give all the answers and kind of alleviate all the concerns that are out there in the market. But as far as the results are concerned, I mean, listen, better than expected October quarter results. January quarter results in terms of the April guide. Also on the top line was better than expected. I think really the key was the Blackwell revenue out there at 11 billion out there, and the fact that the guidance out there implies that, hey, listen, we've kind of resolved a lot of the supply constraints out there, and we are successfully ramping here. I think that really is the key out there. And then as far as the margin issues are concerned, that's the big one out there. Again, on the call, they kind of reiterated their stance on the fact that, hey, listen, we're going to bounce back here likely after, this weak April quarter gross margin guide back to the mid-70s, hopefully at some point in the second half of the year.
Yeah, and just to let viewers know what you're referring to there in particular, the company saw its gross margin at 73.5% in the fourth quarter, which was matching what analysts had been anticipating. In the first quarter, adjusted gross margin going to be at most 71.5%. It said 72% is what analysts on average were looking for, but the company has talked about that it's going to get back up into the mid-70s. Colette Kress saying that at some point this year. She was asked about that on the call to sort of drill down into that a little bit more. And she talked about perhaps improving costs, right? Cutting out costs as they get more adept, I guess, with the supply chain. Are you reassured by that? Do you think they can get back up to that mid-70% range?
No, we do. And, it's not very uncommon when you kind of start new product cycles like this. And listen, Blackwell is still in its early days, right? I mean, when you think about it, I mean, we did see kind of that 3-month delay early on. And, we are kind of, at least we started slowly ramping here in the January quarter. And again, it's going to be a more pronounced ramp as we kind of go here in the April quarter and the July quarters out there. They've got a huge pipeline out there. We have no kind of concern as far as, or didn't have any concerns as far as the visibility was concerned. It was more about the execution side of things. And of course, the costs typically are higher early on in these kind of cycle ramps. And as you kind of start ramping, that revenue, those costs start to subside, and I think that's clearly what you're seeing here, and they're going to be able to kind of improve some of the efficiencies across the supply chain here over the next couple of months.
Angelo, sometimes you'll hear talk whether Nvidia is too reliant on this handful of hyperscalers, those big cloud giants. And Jensen Huang said on the call, it was interesting, he said over time, he says, it's the enterprise market will expand to be far larger than that hyperscale market. You believe that, Angelo?
I think that's the hope, right? I mean, we're kind of migrating towards, this world of AI agents out there. And eventually, it's going to be all about the physical AI world. And that's, really something that Jensen Huang believes in. And as you kind of think about that physical AI world, I mean, it's gonna require the enterprise space to really kind of more aggressively invest out there, on the inference side of things. And, we're believers of that. I think, the question is, how long does this take? Right now here, that about half their revenue right now is tied to these hyperscalers. We don't think that changes much here over the next couple of quarters. It will continue to be largely driven by these hyperscalers out there. But we do think over time, the fastest growth area within their kind of ecosystem is going to be, on the enterprise side of things. The question is, again, it's probably 2 to 3 years or even, more than that down the road. It's not something you're likely going to see at least over the next 4 to 6 quarters in our view.
Is there any vulnerability in being so exposed to the hyperscalers, Angelo?
I mean, there's always vulnerability to it, but I will say this. I mean, when you kind of think about these data center cycles and you kind of think about who these customers are, I mean, they are literally investing, in compute utilizing all free cash flow out there, right? It's not like they're borrowing or doing what what a lot of these telcos did back 25 years ago in terms of what they had to do with Cisco out there. So it's a much different world out there. And given the free cash flow trajectory of these companies, the need for a significant amount of compute here over the next kind of 5 to 10 years, and you kind of think about just the overall cloud environment and the growth of cloud here looking ahead, we feel very confident, or much more confident, with them being kind of tied to those hyperscalers out there than we would any other kind of customer category out there. So from that perspective, I think you should be okay with that, but there's always concerns of kind of overbuild and what have you. I don't think you're at that point in the cycle yet, and you never know kind of how long these kind of data center cycles really last. I mean, it could last 5-6 years for anyone knows. So it'll be interesting to kind of see how this cycle plays out to other cycles.
Yes, it will, Angelo. Thank you so much for your perspective. Appreciate it.
All right, thanks for having me.